Alrighty, in today's video, we are going to be talking about NIO. Should you buy NIO stock in 2022? I hope you guys enjoy it. If you guys get anything in value out of this video, make sure you guys hit that like button, subscribe, and guys, my hair is absolutely crazy. So that's why I've been wearing a hat in most of my videos. I gotta get a haircut or figure out a way to style this. So let's jump into it. I hope you guys enjoy it. If you do, hit that like button and we'll see you in there. Let's go. Come on. Bye. Alrighty, so we are looking at NIO, ticker symbol NIO. Now, for those of you that don't know what NIO is a electric car manufacturer based out of China. A lot of people compare them to the Tesla of China, and with that, they've seen some crazy numbers, right? You can see these lows here at $1.19, highs here at 66 bucks. So, given that this stock, has gone up over 4,000% of value in the matter of just over a year is astonishing. But anytime a stock goes up that much that quick, we always have a tendency to see sell-off shortly after, just like we are seeing right now. You can see we have this general natural downward trend of resistance. So that trend line right now is acting as the hardest resistance on the chart. Every time it hits it, we just see sell-off. It hits it, sell-off, hits it, sell-off. Now, support on the other hand, we did establish a little support near and around this, $32 mark. So it hit it several times. We established some support. Right now, it is starting to break below it. So now I think we'll start seeing some support step in right at this yellow line. That yellow line represents the 200 moving average line. So it virtually tracks the past 200 days closing prices. It merges them together to form this line. This line acts as two things. It, first of all, acts as a trend indicator, so you can look at it and instantly know the direction of the stock, right? We have that natural upward trend. Now, it also, when the stock is above it like it is right here, it acts as a support line. So anytime it hits it, we will have a tendency to use it as support. When the stock is below it, it will act as resistance. So you can see it hit it as resistance in here, curled down right here with that single day candle, tapped it, and we had a little buying pressure there. So right now, I think we'll probably see a little bit of some sell-off. Obviously, right now, the general trend of this stock for the short term is down. So right now, the short-term trend, sellers are in control of the market. And I think that's kind of expected, obviously, because we had that crazy return. I really think that there is a lot of opportunity with this, but anytime you look at the electric auto space in general, especially right now, it is absolutely flooded with competition, right? So you'll have Tesla, Ford, GM, Chrysler, NIO, Rivian, a whole bunch of these electric car manufacturers that are trying to push their product. And as a consumer, that's awesome because you can pick and choose the best product that meets your needs. But as an investor, it's very, very difficult to pick the best growth and the best electric stocks just because of the volatility that it brings, right? We all know Tesla as that front runner of the sector, and I think that is probably the wisest choice if you were going to invest for a more stable and balanced portfolio. But something that brings a little more risk, a little more reward would be a company like NIO or Rivian. And if we actually look at the numbers aren't too bad. You can see the revenue here is about $1.5 billion, and that's a 128% increase, which is fantastic. But anytime you look at a stock, one of the most important things is profitability. How can you expect to grow if you're not profitable? And right now, NIO is not profitable, with a negative 29% profit margin. So what that means is for every $100 NIO actually brings in, they lose $29 on top of that. So that's one thing you have to know as well. And if we look at the cash on hand, they have about $7.2 billion in cash, which is actually pretty decent. So if the company ever slows down, goes through a rough patch, they do have some money to keep it alive, fuel it, invest back in the business. Long-term debt, they only have about $1.5 billion in debt, which honestly, that's not too bad, right? They have way more cash on hand than long-term debt. They could easily pay that off if need be, but most of the time there's no point just because the interest on it is so low. And honestly, companies take on long-term debt all the time to actually grow the business. It's a way to grow it, and it's faster and more affordable for some of these companies to do it. You just have to be a little cautious, when you're looking at long-term debt. Like Ford has over $150 billion in debt. that is a lot more money, but they bring in a lot more money. So you have to understand all that stuff. So given that we've seen some nice numbers on here, I definitely think that this one would be a little more on the higher risk, higher reward play. So for me, I think a good buy zone would try to be getting it around $23 to $25. Right in that range would be a good buy for me. Now, I've been buying NIO for a while. My average cost is right at about $14. So I'm up, obviously a decent amount, but I would love to see this stock push up and see if we could hit like $50 to $60 by mid or late 2022. I think that would be a fantastic return. We would just really love to see some strong numbers come out for this company, and I think they can do it. But overall, it's going to be, more of a higher risk, higher reward play. I wouldn't be surprised if this thing sells off back down to, $20 or, $17 before we see that $60 or $55 mark again for the stock, guys. So that is it. I hope you guys enjoyed it. Alrighty, guys, that is it. I hope you guys enjoyed the episode. And if you did, hit that like button, subscribe. We'll see you later, probably in tomorrow's video. And remember to stay happy, stay safe, and we'll see you most likely tomorrow. So take care.